Wonderful. More and more young faces. That is wonderful.
But did you expect then that the CSRD would only attract old people, Monica?
No, I've seen the attendee list, and we will hear in a minute. We have attendees from all around the world, which is wonderful. I'm very grateful and proud. Yeah, oh, wonderful.
And I think we shouldn't have said this all because I see that the recording has already started. So everything around names, Andreas, is also now on film.
That's it.
Well, you're out there on the internet anyways. Wonderful.
There are so many things out there already, so I'm not worried about my name anymore.
No. Shall we slowly start with a brief introduction from my part? And I will then hand over to Pieter, who will lead us through about a 30-minute presentation on the CSRD. And then we will open the panel for discussion. And that should take about an hour and a little bit, I would presume. A very, very warm welcome to you all. And there are more and more coming, which is wonderful. To today's webinar on CSRD, the European Corporate Sustainability Reporting Directive. That's a mouthful. My name is Monica Krautan. I'm Monica Krautan, and I have the great pleasure to host this webinar today and welcome you all. A webinar that is attended by industry colleagues and beyond from all around the world. I've seen Nepal, I've seen New York, I've seen London, Rome, Berlin, I've seen Singapore, Philadelphia, which is amazing. So there's a great interest in the subject. When I first heard about CSRD, my initial thought was, what an achievement for sustainability to now be firmly anchored in the corporate context, and what a great business opportunity. Directly followed by my second thought was, oh my God, what a challenge is coming our way. I dug a bit deeper, worked through a couple of articles, one of which by Ernst & Young, EY, but found basically nothing on CSRD and hospitality. That is when I reached out to Pieter Lutighuid. Oh no, I botched it. Pieter, you have to tell us now, since I botched it. Pieter Lutighuid. Who after a brief conversation kindly agreed to give us an introduction today, not only to CSRD, but also to his name. I'm sorry. Pieter, he's a strategy consultant for over 15 years, and after his last role as the corporate sustainability manager of one of the world's largest insurance companies, he now leads the Ernst & Young EY strategy, sustainability, and leadership team in the Netherlands. I'm really pleased to have you here. Thank you. Last year alone, he worked on several client projects connecting the dots in EU sustainable finance legislation and the CSRD. When I asked him how I should introduce him, he smiled and he said he likes to make difficult things easy to understand, as with the CSRD, and always look at the bright side of life, as with the CSRD. And yeah, I'm especially happy that you're here, as I said. After the initial conversation with Pieter, I wanted to know how my colleagues in the hospitality and travel industry are tackling and preparing for CSRD. I reached out again and encountered many question marks and a great need for more information and insight. Andreas Koch and Dr. Willy Legrand are two of the first hospitality and tourism colleagues I spoke to with a positive feedback. And today they're joining us in a panel discussion to share their know-how and shed light on what CSRD means for our industry. Andreas Koch, for over 20 years, he works in sustainable tourism and has supported destinations as well as tourism companies worldwide to become sustainable. During his tenure with TUI in Hanover as head of quality and environment, the company-wide TUI Green Days, as well as the systematic quality and environmental evaluation of all TUI contract hotels, was developed and put in action. His passion is to empower people and networks based on his belief that sustainability is not a concept, but a successful business case.
Thanks,
Dr. Willy Legrand, some microphone is open with a funny... Dr. Willy Legrand, he is a professor at the IU, International University of Applied Science in Germany, with a specialization in sustainable hospitality development and management. Some of his students, many of his students are here today, and I'm extending a very warm welcome to you as well. Dr. Willy Legrand is the author of a leading textbook now in its 4th edition called Sustainability in the Hospitality Industry, Principles of Sustainable Operations. And he has now a book in preparation for 2023 called Critical Questions in Sustainability and Hospitality. Wonderful to have you.
Thank you. Thank you for having me.
Yeah, with that, panel colleague, Dr. René Wagner, Project Manager, Sustainability Northern Europe at Accor Hotels. She can unfortunately not be with us today. René, you are dearly missed, and we send greetings if you see us to you in Zurich. And now, without further ado, Pieter, take it away.
I will. I'll just move to my presentation.
Thank you.
So thanks for having me today. And you will see on the left side this fast train. And it's also a picture for the tempo we are going to make today, because 30 minutes on the CSRD is like 1 minute in a train. You will see a lot. The tempo will be high, and hopefully you will get a first grasp on the Corporate Sustainability Directive. And at the other hand, please, if you have any questions, drop them in the chat, because we might not be able to answer them right now. Maybe your answers will be. Your questions will be answered in the panel discussion afterwards, but we will of course gather the questions and try to give as many answers as we can. This seminar will be recorded. The other thing is that the presentation will be distributed as well. I will make arrangements with Monica to do so after the presentation. So what I will do is talk about sustainability developments, sustainability reporting, and EU developments specifically, and then we will take a dive into the CSRD, why, how, what, and when, and I will conclude with some key takeaways. So just to start with some sustainability developments, we see that stakeholder expectations from different stakeholders around long-term value creation have been increasing over recent years. So, for instance, climate change is seen as a top 3 challenge. You have all seen the recent floodings in Pakistan, and who's going to pay for that is one of the subjects on the Sharm el-Sheikh COP this week. Another thing, and this will be around any economy, consumers are willing to pay a premium for products with sustainable attributes. And the question is, how does that work for your industry? So are there any tourists willing to pay extra for sustainable flights or sustainable hotels or sustainable activities? This week, especially very important, governments around the world responsible for more than 60% of global emissions are considering or already implementing commitments to net zero. The Netherlands is not a very good example of that, because we even as civilians had to go to court to be able to be on the Paris track as a Dutch government. So let's hope that in other countries this goes better. Also important, we spoke about the young people just now. 60% of millennials would take a pay cut to work for a responsible company. We even get that with EY. People will leave if we don't become more sustainable. And they're becoming more critical once they work there as well. So it's good to have that voice in your company. And regulations becoming stricter. And that's not just in the EU, because we will dive into the CSRD today, but this is something that's around the world. So also in other compliancy systems, restrictions around sustainability are getting stricter. So specifically for the EU, we have seen a development as of 2015. So in 2015, along with the Paris Agreement, the EU accepted the 17 Sustainable Development Goals from the UN. And since then, so the EU Green Deal is not something new. since then, they have been working on and off continuously on different parts of the legislation, basically with three big goals in mind. And the biggest goal, I think, is to make Europe more green, and not only green, I mean also more social. But the Sustainable Finance Action Plan goals are really reorienting capital flows towards sustainable investment, because we know the money is there. The solutions are there, they're scalable, we just need money to scale them up and make more tempo. We also want to mainstream sustainability into risk management, and it says risk management here, but I would read that as mainstreaming sustainability into business, into every decision you make. Sustainability is business as well. And third point, they want to foster transparency and long-term thinking, because thinking on the short run, as we've seen with the Ukraine war last year, has a large impact on how you create value on the long run, and will also impact the way you will look at sustainability. So there are actually, the CSRD is this big yellow stain in this slide. But it connects to a lot of other parts of legislations and compliance frameworks. So the CSRD is a kind of interconnecting them all. For the financial industry, that's, for instance, the SFDR. But important for your industry as well, if your company is big enough, is the EU taxonomy, basically creating a language around sustainability, what is green and what is not, and later on also what is social and what is not. ISSB standards, you may know, Pillar 3 thinking, but also the SEC thinking in the US is connected to the CSRD. And already a lot of companies are working on carbon and decarbonization strategies for their company, along with the Paris Agreement, or in line with the Paris Agreement. And that's where you see that the TCFD, the task force on climate-related financial disclosures, they are all acronyms, and you have to learn all these acronyms by heart. But TCFD is a format that a lot of companies use to decarbonize their organizations. So the CSRD is really connecting them all, but also having the biggest scope and impact. So what is why do we have the CSRD, and what is it, and well, when will it come into play? So the EU itself has said, well, this is a landmark in the development of company reporting. But I will tell you later that this is surely not only about company reporting, because it's called the CSRD, so the Reporting Directive. But names can be very deceiving. This is about business change. So you need a business transformation in order to report the way that the CSRD wants. And this is the key takeaway that I will also present, I think, in the last minute. But as normal, I already give away the secrets in the first 10 minutes. But sustainability reporting will mature. And they think in order to make climate neutrality objective feasible by 2050, this is one of the things that we need. And ultimately, 49,000 EU companies will perform detailed sustainability reporting, compared to the non-financial directive, which is already into play as of 2014. It was only 11,600 companies complying to that, and they will go on. So in the end, all small and medium-sized enterprises will have to do something on sustainability reporting. May it be directly because of the CSRD, but the CSRD also thinks in value change. So if you have suppliers and customers, in the end, the impact that you create with your company and with your business is also somehow depicted in the way that you work together with suppliers and your supply chain. So left or right, we already see in the Netherlands that also smaller companies will be affected by the CSRD, maybe not directly by the directive itself, then indirectly, because their customers will ask for CSRD information. And I think that's a very important thing to keep in mind. What are the main requirements? Well, a description of the business model and strategy related to sustainability. So let's say resilience to risks, opportunities, is one of the key factors. Also a description of time-bound targets. What will you do with your CO2 footprint in 2030 and 2050, for instance? What's the progress on that? But also a description of the governance of the administrative, management, and supervisory bodies. How do they work in your company around sustainability matters? And you see the whole list here. And I think if you will see the ESRS framework later, so that's the reporting framework later, you will see all the details under the CSRD. And an important factor is not only the description of your business, it's also around, in the end, reporting, but also delivering this information digitally to the EU. And that's what's on the right side. So the digital tagging of information will in the end lead to, on the EU level, also to a measurable objective. So if Frans Timmermans says, I want to reduce CO2 within the European Union by 55% in 2030, then he has to have a good measure. And this measure will come into play with the CSRD. So what are the implications for companies? I have not seen yet a company that's so professional that it doesn't have any profound implications because they are already there. So it marks a step in corporate reporting, but also in business thinking around sustainability. So it has far-reaching implications for companies and will require them to embark on a change process. You will need to disclose more sustainability information than ever before. Your information will need to be robust. And I think maybe we'll have a conversation around that in the panel later on as well. Data is king, but data quality is king as well. So if you measure your CO2 footprint, if you measure your impact on social dimensions, what is the KPI that you use and what's the quality of the data underneath is very important. Because in the end, that's not the first step, but it will be the last one, is the Corporate Sustainability Due Diligence Directive, the CS3D, that will come into play after the CSRD. So that's another acronym for your list. The Due Diligence Directive will in the end require you even more. So it's more than the CSRD to have your accountant near you. And get limited assurance at least on your results. So I think if you have an auditor or an accountant look at your sustainability information, the same way he does at financial information, you will have a very detailed discussion with him around the consistency, for instance, or the validity of those figures. So there's actually a lot of ways you can already prepare for that, but we will come back to that later. So this is a little bit of math, and let's not get into it too deep because it's very detailed, but which companies are in scope of the CSRD? And then we have two ways of looking at it. That's first on a standalone basis. Large EU companies, and that's including large EU subsidiaries of non-EU companies. That have to do with two at least of the following criteria: a balance sheet of over 20 million euros, a net turnover of 40 million euros, and 250 employees on average over the financial year. And as you will know, this will hit a lot of companies because these amounts, the threshold is not that big. So it also connects to a lot of what we call small and medium-sized enterprises. They are already this big that they need to be on a standalone basis. They need to report within the CSRD. And all listed companies on EU regulated markets also apply on a standalone basis. So there are a few exceptions there as well. So listed micro companies, you see the criteria there underneath. And some subsidiaries are exempted if they are included in a consolidated sustainability report of their parent company. But then again, you have another rule. If your parent company is established in a third country out of the EU, the subsidiary is only exempted if the EU recognizes some kind of equivalence of the reporting standards of that third country with the CSRD. And that sounds very theoretical. So somebody has to do investigations into how the compliance frameworks in those companies, so let's say, for instance, the US, how they comply with the CSRD. So I think that's very theoretical and also asks for further clarification from the EU itself. So on a consolidated level, the parent companies of a large group, so we have actually a lot of subsidiaries, for instance, in the Netherlands that have a German mother. It's for them, it's easy. On a consolidated level within the German mother, then they are part of a large group. Their information will be consolidated on the mother level. Also exceptions there. When a parent company and its subsidiaries are included in a consolidated sustainability report of another company, they are exempted from the obligation to draft a sub-consolidated sustainability report. And parent companies that are subsidiary from a parent company in a third country, again, somebody has to look at the equivalence of the compliance system compared to the EU. But most of the times I leave the exceptions for where they are. So I would have a look at the large companies and the listed regulated markets, because those are the most important rules to follow here. And as of the 1st of January 2028, third country companies with substantial activity in the EU, and that's now been specified as a net turnover of more than 150 million euros in the EU, and which have at least one subsidiary, large or listed, or branch with a net turnover of more than 40 million euros in the EU, are required there. I think a lot is needed to in the end specify the right way how you need to come up with your sustainability report. And I think the most important part is where we get into now. This is, and maybe you will have a shock moment as well, because the first time that you see this, it's like a Lego box, right, with a lot of blocks in it. And I have to tell you, a lot has not yet been specified and agreed to within the EU. So I will take you step by step through this framework, which we call the European Sustainability Regulations Standards, the ESRS, and all those documents you can also find on the internet. For instance, if you type ESRS E1 climate change, you will get a Bible, let's say, a book that says everything about what do you need to do there. Basically, I look at this. I will be a bit a Zorro. And I would like to take my sword and first cut off the cross-cutting standards, which you see on the left. Because basically, if you turn this around, this slide, then the cross-cutting standards would be the foundation of your house, the foundation of everything. And this is what I call the management system. So one point that's very important for the CSRD is that you show how your general principles, how your strategy, your governance, your definitions for policies, targets, action plans, and resources are basically working in your company. So this is where it doesn't hit reporting, it hits the management system around sustainability in your company. What are the KPIs? How do you go about decarb? What are the targets that you have? How do you report against it? What kind of processes do you have in place if it's not going the right way? So everything that you take as a foundation is done by the cross-cutting standards. And that's also one of the places where you can start in your company preparing for the CSRD, is working on this foundation. Then a second part of the ESRS framework that's really important is the double materiality, which is on in the box on the left side. And there you see the double materiality really means looking at the most material topics that will hit your business. So it has basically two types of impact. One, you can have an impact on the world with, for instance, your CO2 emissions negatively or polluting the environment around you. Then we call it impact materiality. That's the way you impact the world. But what the nice thing is that it also thinks the other way around. So what are the things that impact you? So for instance, if there's a CO2 tax or a CO2 price that you have to pay, the more CO2 you produce, the more tax you have to pay. It would also influence your ability to operate as a company. So double materiality is around making choices which things are material to your business, and that's for a bank different than for your industry or for the agricultural industry. So it gets more specific. So where the cross-cutting standards are around the management system as a whole, the double materiality is really making choices about what is material for you and your company. You will calculate scores to do that, and it will give you a first radar of items that are really important to you. And that will in the end also influence the way that you go around your topical sector agnostic standards. Those are the standards, ESG standards, that are valid for every company. So for every company under the CSRD, you have to report on these items that are in the middle here, on environment, social, and governance. And we're still waiting for them to be approved. So you can already start with them because we know for 80% what they look like. But there's not, as we know the EU, there's never 100% sure when we're going to get there. Now the expectation is the end of 2022 for those topical agnostic standards. The sector specific, so the items that are specific for your sector, still have to be worked out. And this is where you see in the Netherlands where insurance companies and banks are already preparing for that themselves. So they are no longer waiting for the EU. They are taking the whole framework and they will work it out. Also for the sector specific items. An important thing around sustainability reporting with the CSRD is the assurance readiness. So what is really needed is to get a limited assurance on the way you report your sustainability figures. So you would have to look at your assurance provider, at your accountant. How will you work with them? Because extra expertise is required. Looking at non-financial information is very different from looking at financial information. So for the accountants in the world, it's also a question, how will they do that? So we just talked about the principle of double materiality. Your management report will be at the center. So it's not all around how much CO2 you produce and telling that figure. It's around how you manage sustainability. So you also need to show in your report how you do that. So these are the most important implications around the assurance of sustainability reporting. And then the question, when does it all come into play? So you might remember that on the slide we had on which companies are in scope. So the big companies and the listed companies within the EU or the groups that are big enough on a consolidated level. So the first pack of these companies will start gathering their data on the 1st of January 2024. And in that year, they will, according to this ESG framework in the topical agnostic standards, they will try to get their information in that frame. And then per the 1st January of 2025, they will capture this in their sustainability report. Then a year later, on the 1st Jan of 2026, it will be applicable for listed SMEs, small and non-complex institutions. And per the 1st January of 2028, it will be applicable for third country companies. So that's outside of the EU. So you will see that in 3 years, this will grow. And also what I always want to know is, and when will you take your decisions, dear EU? Because it's very important. We've shifted this for the last time in May this year, and before that in March. So timelines are still shifting. But it doesn't mean you couldn't already start with this. So my advice would also be start with it, even though it might be a year later. The CSRD, and this is one of the strange things, has a bit of a strange logic, because it sounds like reporting directive. And that's where you think, well, the reporting guys within my company, they will deal with this. So it's a kind of reporting coming to the back door, having implications on the whole of your business. So that's what you see on the left side. It comes in through the back door and having impact on the way you look at your strategy. So that's why I talked to a bank this morning, and they had the reporting guys. They had the, as we say in Dutch, the ape on their shoulder, which is the CSRD ape. And they were asked to do this. And then they said, well, it's about strategy as well. So they pointed to their CEO. I think that you have to do this. So they had a very, well, in the beginning, unfruitful and later fruitful discussion, because it's like it is on the right side. It starts with your strategy. It starts with this foundation, this cost-cutting standards. Then you work on your objectives. And then you work towards, how do I report that? So it sounds like reporting directive, but it's counterintuitive. It's about business transformation. So that is also my first key takeaway. CSRD is not just a reporting standard, it's a business transformation. And governance and readiness assessment can start as of today. So a lot of people think, I don't want to do this, especially the Dutch. They don't like new rules. So they would think, I will wait for that. I will wait for that bus or the police bus to arrive. But I see, as an optimistic person, no reason not to start this, because working on your management system to embrace sustainability in your company and organizing it the effective way is also about cost management. It's also about thinking effectively. So how can you as a company prepare for this? Get familiar with the directive. There are a lot of people here today, and I applaud you for being here, because hearing about it is the first step. Get familiar with the directive, understand its implications, and on a practical level, consider how you can identify and gather sustainability related information, but also where you have already started, because a lot of companies have already started, and that's also a part of the journey. Consider how to identify and value your company's main intangible assets, because sustainability still is a lot about intangibilities, about reputation, about human capital. So there's actually a lot of things that you can already do to prepare for this, and I would always say, take a very structured approach in this. Sorry, I've gone one too fast. It's a journey, and whether you start with CSRD gap assessments, or you will begin by talking to your stakeholders, or start with double materiality, it doesn't matter, as long as you take those steps. And this is one sequence in how you can take those steps. And what I would also recommend you to do is work, well, maybe not with EY, but any partner that can help you with a structured approach, one, and two, making difficult things very simple to understand. But a lot of companies have already developed tools to help you do these first steps very quickly and understand your own company better. And please do it with us, or do it with anyone that can help you, but don't paint the house yourself, because there's a lot of companies struggling with doing this internally, and it's more easy to do it with other people. And that's why me and Monica also thought of what could be a way to do this. And we have experience with this in the Netherlands, as I know by heart. A community of practice might help you to fast track your CSRD journey. What does it mean? Our formula is to have 4 theoretic deep dives on the most important part of the CSRD, on the cost-cutting standards, on double materiality, on the sector agnostic standards, and a deep dive on what could be your action plan going forward. And then I think the nice way of working is to have, with these theory deep dives, also the breakouts. And in the breakouts, you will go into a workshop, which you and and the other members of the community of practice will work together and discuss how they are doing this. And this might help you take the first steps together. You also get homework. Well, I'm sounding maybe like I'm a teacher in a school class, but this is sometimes also what people need, because if you get homework, you will do it. You will come back with your assignment and show how you make your steps, and it will make you proud as well. So then combined with frequently asked questions, Teams site, and where you can find all the materials, this is something that we would like to offer you to think about. And if you're interested, please contact us and we will see how we can get this going, because I really believe that we have over 70 when I first looked at the chat. It's now 83 people here, a lot of companies represented. Please start today, help each other.
Wonderful. Thank you, Pieter. That is wonderful. Business transformation is what I take away. And I would like to open for discussion and invite Andreas and Willy to join in. Anybody with questions, please send us your questions in the Q&A or afterwards. As Pieter has outlined, we're working on a community of practice that will take us to the next steps, and you will hear a little bit more after this webinar. So yeah, Andreas, Willy, Pieter.
Whatever you want to start, I have my reflections on that, but Willy, I'm happy if you want to start, because
yeah, I mean, thanks very much, Pieter. Thanks very much for this outstanding rundown. On the slides are great, and there's so much information there. I feel that you've covered lots of very, very important points on the CSRD and the ESRS. And yes, I agree with Pieter as well. Those acronyms, you need to know them, because we're not going to use the long terms all the time, talking about the corporate sustainability reporting directive. That's just too long. So we're going to use the acronyms. Yeah, I mean, what is there to say? I mean, I've been asked about, in the hospitality sector, are we talking, I've actually talked about this 2 or 3 weeks ago. We were talking about whether this is tectonic shifts or, a normal evolution. And I think it's a mix, in fact, in the meantime. The large companies, as Pieter's mentioned, are already well placed to tackle, I think, much of the CSRD requirements that will be coming, simply because the majority of them already reports extensively using GRI, Global Reporting Initiative. It's mentioned in the chat as well. I think in 2019, we had over 240 large hospitality companies reporting using the GRI. So I think, and there was a question about the alignment between the ESRS, I mean, the drafts that are out there, and the GRI. And I've pointed out to a technical mapping of GRI. So I can just recommend to go and have a look. It's fairly long. It's 84 pages long, but you'll see where the connections between GRI and then the proposed disclosure requirements for the EU are, and where there's diversions. But let's face it, I mean, there's a lot of commonalities. Of course, there'll be technicalities that are different, but something to remember, we're not also at the final. This is all still at the draft stage at this point, and so there'll be adjustments. So for the large companies, I feel like saying, okay, hospitality companies, they'll be, I think, set up to, to align, simply because they are used to reporting in one way or another. And I think maybe the biggest disruption will be with the SMEs. And Pieter is right in saying, okay, well, the SMEs are indeed not within that regulations. They're outside of that scope with the mandatory reporting. But there are so many reasons why ESG reporting will be something those SMEs will want to do, that in fact, I think the biggest disruption will be for the tourism SMEs will be in the fact that reporting will become something that you will want to have, or you will need to do, in fact. I don't know if I have to expand at this point, but we can. But I'll pass on the word to Andreas, and we can come back to this if you want to.
Well, thanks for that. And Peter, again, thanks for this great overview. I'm coming from a corporate world, and I knew all the terms, and I lost them partly in my work because since 10 years I'm now working with SMEs on the tourism in the tourism sector. And as you said, Willy, the big challenge for me is really how do we how we translate that into the SME world, because there's a huge disruption. Because honestly, I'm just coming back from a week of working with hotels on the island of Sylt here in Germany. And some of them even had no logic of making their sustainability transparent. So basically, I have two hopes here with that new directive. One, basically three hopes. One is that I really think it's a tectonic shift in the way we look at reporting. It comes through the back door, as you said, Peter. That's very interesting. And in the tourism business, it's interesting that the MICE sector, like the expeditions and all the conference sector, they are pushed very hard from the cooperative world. So we have more success in this area because there is a pushing along the line on in that sector. So that's my hope, that looking at the numbers, Peter, that you presented here, that it goes up to much more big companies being involved there. They're pushing down the line. And that is my third hope here, because I have experience in a project on Mauritius where we, for 4 years, were working with small companies as a EU project, was supporting small companies. And some big companies joined, big hotel chains. And we asked them, why do you join? And they said, well, because we are working very closely with SMEs, and our job could be to translate these big demands into the support of SMEs. So if companies have that consciousness of translating that as their ability to translate that big framework for the SMEs, because that's a big issue for this market. These are my hopes associated with that directive. And I'm with Peter as well. I still can't grasp the whole dimension of it, because I'm pretty sure it will be a big influence. But so far, talking about SMEs, they are far away from that. There are two issues that are very important in these days for SMEs, at least in Europe. One is energy cost, and second is to get good employees and a good task force for really doing their business. So these are the challenges in their materiality, which are important for them. So yes, agreed, Willy. For SMEs, it's a big topic, and my hope is that big companies might help them on that journey.
Maybe there's one. I mean, I think we, because there's a lot of people from the EU on this call as well. I mean, we have to realize, and it's like that in so many other countries. I mean, 99% of our businesses here are SMEs, and we're talking about, I think, something around 25 million companies that are SMEs in this country. And in the field of tourism, I mean, it's very similar. I think we have something like 2.3 million businesses in the EU that are tourism related, and 99% of them are SMEs. And I mean, they have an impact beyond the fact that they're small companies. I mean, they provide 10, 12% of the employment, 11% of the GDP. They have a significant impact. They're players in our neighborhoods. There was in a chat about the gastronomic, restaurants and things like that are core and pillars to so many neighborhoods. And when we look at those companies, those small and micro enterprises, really, they do have a significant impact. And I think, I mean, when going back to the Green Deal, there is a requirement to a transition to low carbon economy. And I mean, Andreas just mentioned energy being one of the topics. It's not the only topic, of course, but it's a big one for small companies now. And many of those companies in hospitality, they find themselves at the crossing of major regulatory changes, technological changes, and basically they need to ensure finance for that transformation. And whether you need to upgrade your building to be energy efficient. I mean, you find yourself at that, and to be able to be competitive and to secure funding, these SMEs will have to be able to demonstrate that ESG matters. I mean, it's like a chicken and the egg a little bit. I mean, in order to obtain the funding to drive that transformation, you have to be able to say, this is how I track my energy. This is how I report it. This is how I do water. This is whatever it is that you're doing. And so I think there's a, obviously that framework, there needs to be a framework that enables those small companies without having the burden of massive amount of bureaucracy to be able to report. And I think Peter's mentioned, this is in the works as a simplified version of the reporting standards. We don't know what that's going to look like, but I agree also with Peter, and both Andreas and Peter, to say that starting to work on this is got to be now. Like, you cannot, waiting just simply for the sake of waiting because you don't want to approach. I think it's a very bad strategy.
Yeah. So in the chat, you also see questions on how is the supply chain related to the framework. Well, in fact, if it's so in terms of, for instance, taking the CO2 example, we often have scope 1, 2, and 3, as you may be familiar with. And scope 3 is everything that you buy. So how is then your supplier connected to your business? Well, every product that you will buy, whether may it be a flight or food that you order, has to have CO2 information in it. So there is in itself the expectation that anyone who does business with these large companies are already working on CO2 figures, and they may not all be qualitatively that good, and you might get into new data as you grow in this field of play. But everything you buy that has a social and an environmental side, you will need to report something about the way that your products were made. So, for instance, the clothing industry is a very important factor in. There was a question around consumers as well. So, how far does this go? There is a usage phase of your product. So, how long for the tourism sector, this is very different. But for the clothing industry, how long if you wear something, how long is the use phase of those products before you will leave it? What is your own process about? But also, how does it go with pollution, production processes, and social rights in the companies where you buy your clothes? And all those things you really have to know before you go into reporting. So there's actually quite a large impact from your supply chain as well. So it's scope 3 for CO2, but also for social rights. So, for instance, you all know the example of Shell in Africa, with largely polluted areas because of leaking pipelines. If Shell would have had to report under the corporate under the CSRD about 10 years ago, they would have massively had to report how they go around social rights in the companies where they operate. How do they go around communities that live there, because they have rights too? How can those communities make complaints to the company? How do you handle those complaints? What do you do in terms of actions? So there's for every part of the ESRS framework, there's a plan, do, check, act cycle around it. So it starts with your own social dimension, with your own co-workers within social, but it also goes to the supply chain there. So it's a very generic answer to some of the questions in the chat, but it will have a massive impact on how we think about a good life in Pakistan, or using virgin materials or recycled materials from China, for instance. What do we know about it? So also this part of sustainability is already a growing profession.
Yeah, and maybe if I can just add on, because I think Peter's mentioned a very good point. You're talking about other industries such as the textile and the clothing industry, but for us in the hospitality sector, especially, scope 3 emissions, it's massive, really, when you consider the supply chain. We're talking about all consumables, food and beverage, operating supplies and equipment. We're talking about, all your FF&E, eventually used with furniture, fixtures, equipment for your hotel, the renovations, refurbishments, which are quite speedy these days. So 4 or 7 years, we renovate the whole thing. We have upgrades and so on. And so when we think about scope 3 emissions, it's actually fairly intense. And I think Ina has got a great questions here in regarding of scope 3 data, because this is one of the issue that our industry faces, is the granularity and the precisions of that scope 3 data is still left to be desired. There are companies now that have been developing and working very close with the suppliers, following the environmental declaration of products that they have, trying to capture, for example, the carbon emissions of the manufacturing and transport of those products. I mean, it's complicated, but I think as we move along, we're getting more and more, we're getting that data more and more. And then that could, you know, if that transparency on that data is available to a restaurant or to a hotel, you can actually make better decision and in terms of the impact of what you actually put up in your hotel. But scope 3 is actually a big issue for hospitality, depending also where you are located. If you're located on the deserted island and basically you have zero access to anything, I mean everything is got to be imported, then obviously your scope 3 is quite a high part in comparison to scope 1, scope 2, which are your more direct emissions.
Can I add to that, Willy? Because I think it's very interesting, scope 3 discussions on tourism. I would not only look at the bad side of the coin of that's really hard. Of course, this is like, I would say 95% or even more of the emissions in scope 3, which is basically very interesting. But what is interesting in tourism as well is that scope 3 often can be associated to the product itself, to the authenticity of the product, to the product dimension. And that's what I'm trying to do in my business, working with small and medium-sized companies. I try to link them to the product. So to give you an example, just last week, for 1 year, I hired now a Michelin star chef in my business because I realized 30% of the emissions are coming from the food sector, and in the tourism, we can do a lot on that food sector. So what I'm doing is I've developed a training for chefs, for the kitchen team, to understand their impact on the products they're having for the menu design. So there you're linking the scope 3 emissions directly to the product dimension. And that's where you can talk to the people. If you translate it to the product, to the authenticity, to the future-oriented product that is even more attractive for the clients, there you're talking. And that's what I think we should think about in tourism. This linking to the product dimension, this has two really good advantages. One, you get to the people. And the second is thinking about the way forward. A hotel and the way a hotel designs the product is a very good blueprint for any home, for any area. So we can use hotels as an educational field for people for getting into the future. The same as for islands. Like you have all the challenges of the world on an island. So if you're solving that in tourism, you can use it as a role model, as a blueprint of how the transformation can work. So this is what I'm really interested in tourism, to add to this scope 3 discussion.
So another interesting question is around reputation, and what will the implications be for a company if they do not comply with the CSRD? Well, I think we will not have a CSRD police, so there will actually be no police boss stopping in front of your company to arrest you or do something. But if you would take a look at how the EU handles and regulators handle, for instance, privacy leaks in your company, as already known by banks and insurance companies, if there is a data leak and you don't comply with GDPR, you will be heavily fined. And looking at the developments around GDPR, I can only imagine that if you do not comply with the CSRD, it's first of all very bad for your reputation. I think that a lot of companies will not work with you anymore. Another perspective is the investor perspective, because looking at data and data quality, no one is more professional with ESG data than, I think, two exemptions. One is the people that work with CO2 data and do calculations. It's becoming better and better all the time, both in quality and in life cycle analysis. And other people that do that really correctly and swiftly are the investor rating agencies, because they already see what ESG is worth in terms of your business model, and they do calculations on that. So the valuation of your company will be different, and will have a huge impact if you don't comply with ESG. And already 2 years ago, when I left the insurance company where I worked, investor calculations, ESG was 15% of the whole value of the company. So it was already a very determining value. And I think with the CSRD in play, it will, in terms of percentage, it will only get bigger. So I think in terms of valuation and reputation, this is very bad for your company. Only then to think about consumer behavior. What will people do if they can choose between a polluting airplane and a less polluting airplane, or a polluting resort or a less polluting resort, or a resort where they handle social rights better? So I can only imagine that it will be self-evident how this will steer itself. But on the other hand, looking at GDPR, I think there will be a finding system as well. And I think that national regulators are now looking for the first time into how are we going to govern the CSRD and other regulations as well, taxonomy, IFRS. There are a lot of standards that need to be managed and can be very good or either bad for your reputation. So I think this will manage itself.
We have actually a number of studies for those of you who are interested in this. There's been a number of studies conducted actually over the past few years. They use different methodologies and sampled, but they've showed that basically the publication of non-financial reports has a fairly large positive impact on financial performance. There are some studies that show there is no relationship, and there are a few studies that show there's a negative relationship, but most of them show. There's one particular study that was published in 2018. The guy reviewed 132 different papers at top level journal, and the conclusion was 78% publication reported that positive relationship between sustainability and financial performance, which I thought was actually quite interesting, to be honest. Although, you know, it's not only about the benefits of a financial performance, as we've just said, it's also about, you know, facing potential legal consequences and so on. But I thought this was also interesting. For those of you who are interested in those studies, you can probably find them. Otherwise, drop a line and then I'll send that study. But, you know, for small businesses, again, I mean, small businesses, there's so many hands-on things, because what Andreas was just mentioning now with staff and energy, which are very short-term crisis, and it's for many, it's existential. I've seen, you've probably seen it, Andreas, this past week from the DEHOGA, this survey about the fact that one in five in our industry is thinking it's not going to make it. I mean, this through the winter because of the energy and other issues. And I mean, we know that there's, I mean, we know that the cost saving potential of taking, you know, resource management approach seriously. And we also know from studies that, you know, an alignment of your business taking sustainability seriously is also a potential attractions for young people who actually want to work for companies that's not part of the problem, but work for companies that's part of the solution. And I think we see this more and more, this alignment of values between the individual values and the business value as not being part of the problem, being part of the solution. And I think that's where perhaps SMEs can capitalize now, in fact. I don't know how you see it, Andreas, because you're working with the SMEs very closely. So I don't know if that makes sense at all, but...
Well, as you mentioned, 1 out of 5 will be maybe not there anymore in the future. And I think Rita mentioned it also in the chat that this is a necessary consolidation of the market, which is in a way true, because I perceive tourism as a kind of reluctant branch and sector in that kind of activities. So basically, they have to pay the bill for not addressing this topic for the last 10 years. What I would like to light a little bit on the way forward, because the last comment here in the chat was about how can we approach that, and I have 2 ideas in that. I don't know how you feel about it, but for example, for the energy audit system, big companies had to do the energy audits every 4 years, and in Germany and many other countries, the SMEs got 80% support for doing that. So the big companies had to do it, the small get the support. So this might be one role here to support SMEs on the path. And the second, what I see, Agathe, you said it here, could SMEs regroup? And for example, I myself, I'm an SME with only up to 10 employees. So what I'm doing right now is I'm doing common goods reporting is, I think, the Gemeinwohlökonomie common goods reporting in Germany. So there I'm working with a peer group of 10 other SMEs to help each other on the way forward. So this is, I guess, a good idea of grouping know-how and working on a common path to adapt that. And that's why I like Peter's idea. Maybe we could have something more like more as a translation into the SME area of the big topics, and try to find a peer group here to address that topic. That would be also interesting from my point of view. And I would be happy to help facilitate that translation because I'm working with SMEs every week.
Wonderful. That was the community of practice that Peter was talking about.
Exactly.
Yeah, absolutely.
And maybe that's the call, really. That's the call for the hospitality sector, which is extremely fragmented, to actually join forces in creating this. The reporting will probably remain an individual report, but the path towards that can be a common approach, in fact.
And I'm thinking about the CREET project. I know Danai from the CREET project is here in the circle, where we work together with 9 hotels in a destination approach of a, let's say, a sustainable food destination. These 9 hotels were working together, were helping each other to address the challenge in the best possible way. And this is the way forward I'm thinking, as you mentioned, Willy, to join forces. Even competitors could join forces on addressing this topic here.
Yeah. I think Rita and her Great Hotels of the World is working towards that a little bit from the discussions we had in the past. Yeah, wonderful. Well, thank you so much. It has been a very full 1 hour, and I'm sure we could continue for another hour. Please address all the questions that you have. We're all on LinkedIn. Contact us, contact me, contact Andreas, contact Peter, and I'm sure Willy would be open for questions as well. We will put our heads together on that community of practice and release something very soon. And for now, thank you all for being here. It's been a pleasure and a privilege, and the start of something wonderful, I think. So thank you so much.
Thank you very much, Monica. Thank you, Andreas. It was great. Thank you, Peter.
Peter.
Thank you, everyone. Thank you, everyone, for attending and asking the questions, including Professor Leis.
Yes.
A colleague of mine. See you.
Bye.
Bye-bye.